The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
We've got 5 days left in 2021, and time is running out on making a decision on what to do about your crypto losses if you're thinking about tax liabilities. Joining us now to discuss is Mark Steber, Chief Tax Information Officer at tax firm Jackson Hewitt. Welcome, Mark. Great to have you here. So,
great to be here.
A lot of people are thinking about their taxes. Tell us about some top strategies for folks who want to limit their liabilities.
Well, the first strategy I would tell everyone that's investing in crypto or any asset, to be sure, is that there are no absolute rules of thumb that work. If you hear one, be guarded. If they say, do this, it's not probably a good idea. And I say that because each individual person's unique situations, facts, and circumstances guide their investment strategy. So you can't say, sell your losses. That may or may not be a good strategy for you. It might be for someone else. So look at your own unique individual set of circumstances, your entire investment portfolio, and frankly, your entire tax year and life changes to boot, and then apply some, time-tested and proven transactions, whether it's dispose of those loss leaders that you're hoping will turn around, stocks or virtual currency, or anything for that matter. But you have to look at yourself. But having said that, one item that does tend to work year in and year out is if you're holding on to losses, stocks or virtual, and you're hoping next year's going to be my year and I'm just going to continue to hold it. But over on the other side, you've had some gains. It might be a good time to look at those assets, dispose of them, reap the losses, and offset some of those gains, because you can offset losses with gains of a similar type, short-term or long-term. So that is a sound strategy, but it's not just for everybody, because your situation might be different than someone else's. But if you're sitting on losses and you're sitting on some gains and you've got unrealized losses, it might be time to pull the trigger on some of those stocks or currency.
So, Mark, welcome. Thanks for joining us. That sounds like advice for pretty much anybody, I would guess, who's an investor, to be honest. With crypto, though, obviously some unique situations with regards to, the timing of things, the reporting on things. What are some of the specific pieces of advice you'd give to a crypto investor who's been investing throughout the year in Bitcoin and other assets?
Well, I'll give you my number one observation in the virtual currency. And I invest, my children do, I have friends who do. And the thing that I see most common this time, as opposed to a few years ago, when it was really, lack of understanding that gains are taxable, whether it's a hard fork or any other type of a transaction where you add gain, those can be taxable. So there was a lack of awareness in the old days. Now, in the more current version, where I've read in recent studies there are upwards of 100,000 crypto millionaires, there seems to be a lack of complete understanding on how the actual gain and loss and income recognition rules work. So I see a lot of people getting it wrong, not by lack of knowledge. They know they have an activity. They know they probably have some gains, but they don't understand, their gross realization versus their basis, how to calculate basis, what information that they can get from their broker dealer, what information the IRS is going to have. And so a lack of awareness is a big problem today. And if you don't understand how to calculate your gains, and there's a lot of different transactions from harvesting and mining to just pure buying and selling to a lot of these, grants that you get. Those are treated differently, and how to tax them, where to report that on your tax return, the timing of when to report a gain or a loss can be equally confusing. And so what I would start with is by saying, make sure you understand what you have in the way of assets, what you have in the way of income, what you have in the way of gains and losses. And if you're not completely crystal clear on that, you could be courting a problem. Either lack of reporting the income to the IRS, which is in and of itself a problem, especially as IRS has become aware of, the vast amount of gains on crypto, or just simply reporting too much and expecting the IRS, to back off some of that gain because you put it on there, they'll fix it. That's not how it works. And then there's states as well that are coming after this money. So an accurate reporting and correct reporting on your tax returns critical, both to make sure you report the right amount, but to report not too much and cut into your realization and your gains. So doing it right is very important.
Mark, I have a particular question from a contractor who earns crypto and reports taxes quarterly. They end up, concerns around having to pay a tax bill when their crypto invests, but later on that crypto goes down in value and they don't end up having to pay a higher tax bill on crypto that's no longer worth that much. So I wonder, what is your advice for contractors that earn in crypto, report quarterly, and then have to deal with the volatility?
Yeah, that's certainly an issue. And the reality is the virtual currency world is a volatile market. So you can have income in one day and losses the next day. And you don't have to necessarily report income tax liability, just because of the increase or decrease in value. But you do when you have a transaction. And that's another part of that area where people don't understand what a transaction is. Now, I give speeches from time to time. People say, well, I didn't get cash. Yes, I was buying and I was selling and I was converting, and I was trading, but I didn't get cash, so I don't have income. And that's not true. If you've had a taxable event, which is simply the buying and selling of an asset, even a virtual currency asset, you have a gain or perhaps a loss. And so the reality is you might have gain in a quarter, and you may have to have estimates made because you show gain in that quarter. And in the next quarter, your assets may have decreased, but because you didn't trade, you've not had a realizable loss transaction that can offset the gains from the prior quarter. So it's important to understand what transactions you have. When is it income? When is it a loss? Not just when it goes up or down in value, because that in and of itself does not trigger a gain, but the disposal, the actual disposing of an asset, be it a stock, be it a bond, and in particular, the quickness and ease with which you can trade currency, virtual currency, it's something to watch very closely. And so I guess if I had one piece of advice is to make sure you've got a good broker service that gives you good information, quarterly and timely information on which you can then do your calculations, do your just estimates, if nothing else, and at least understand where you are. And that really becomes important, in a couple of years, because there were new rules passed as a part of this year's tax infrastructure bill that says starting on tax year 2023, the IRS, for many Americans, will have access to a lot of that information. So it won't just be a no harm, no foul, maybe they know, maybe they don't. The IRS will start getting real-time reports for tax year 2023, and then the man will know, and you better be right at that point. So it's good to get started now, but there's going to come a reckoning in about 2 years, where you won't be able to just plead that I didn't know, and maybe the IRS will find out, maybe they won't. They will find out. So get your best practices in-house today.
Yeah, Mike, I wanted to drill down into that a little bit further. This new provision, of course, is quite a dramatic change. It was a highly political one. It had a lot of attention in Congress. What are the implications for the average person here? What are they likely to see? I mean, and how much more is going to be captured by the IRS, do you think, that wasn't captured previously?
Well, historically, and even right now, there's no reporting obligation by a virtual currency broker. There are some transactions that get caught up in the 1099-K for people who have a lot of cash moving in and out and getting paid by credit card. But there's no broker statement like for a stock transaction where that information flows directly to you, the taxpayer, and then over to the IRS, and hopefully the amounts are the same. And if not, you can reconcile it. But there's no reporting responsibility historically for a broker, of virtual currency. There will be now under the law starting for tax year 2023. You'll get a broker statement. The IRS will get a broker statement. So at a minimum, you'll see more transactions reported to the IRS, and accordingly, the taxpayers will ultimately either report that themselves or they'll get an IRS letter. The important difference now is that there was no reporting responsibility for brokers. Now there is. Now there's some controversy in the law on what is a broker, but having said that, to your question, the lion's share of people that are brokers, they kind of know it, and they're large-scale dealers. They now have to report to the IRS, and they have to report to you, the taxpayer. Historically, you had reports. I would get statements, and I would know where I am, but the IRS did not. And maybe I didn't understand my gain. Maybe I did. In 2023, that will no longer matter. The IRS will have the totality of your transactions. You better have a good transaction basis on the calculations for that, or you'll pay too much, or you won't pay enough, and they'll come ask, and then you'll have that whole problem. But the point is, there'll be a reporting statement now, starting next tax year in 2023 on those tax returns that you better get it right.